what kind of advice would you give in terms of tax reforms? What do we need to change?
To me, I think that there are several areas that we need to look at. But when you look at actually, from the start, you are saying that how is our tax regime? When you look at currently, the system we are applying is more of deepening than widening the tax base, because you are more looking at playing with the figures to increase revenue collection. For instance, if you're talking about now an increase from 500 to 1,000 for cement, you are not widening the tax base, you're just deepening the tax base. If you're talking about increasing, so you look at some of our tax regime, some of our tax treatment is more in terms of increasing the rate than widening the tax base. So to me, I think we just need to look at which areas within the economy of Uganda we have non-taxed.
For instance?
Or which areas have we exempted and they are taking away what we would have taxed as Uganda. For instance, when we were trying to look at our fiscal regime in the mining sector, we came to realize that Uganda is charging $200 per kilo of gold. Can we look at how can we increase on that so that we can be able to get more? Because we are selling more. So if the window is giving us an opportunity to tax more, let us look at that so that we can get a reasonable amount of money from that. When it comes to the issues of the digital, because we have been advocating for the digitalization of the economy, and yet we are taxing more of the sector in one way or the other. So if you're saying that we are going to bring on board a bank in terms of equity, and it has not been being taxed in Uganda, let us look at that. Does it cause any problem? Because the intention was that if you tax more of this sector, people will not be, we will be checking on financial inclusion. But holding an account in a bank which doesn't have any transaction doesn't make sense. So to me, if we can tax that, it can give us an opportunity to be able to generate more revenue, or even maybe exempt or reduce on the withdrawal charges on the mobile money and see where can we get the money. Because if people transact more, and those ones who cannot be brought into the taxable net can help us to get the money into the economy.
Maybe for someone to understand well, properly, the issue of exemption, have you been able to quantify how much we forego as a country because of these exemptions?
Yeah, there is the tax expenditure report provides for what we forego. I think it is $3,000 plus. And to me, in my perspective, tax exemptions are not bad. In this country where we are more of capital importing countries, where we don't have liquidity
to support,
to support investment within our country. But the issue on the value for money, the cost-benefit analysis on what we give out, because, for instance, in terms of attracting investors, if you're saying that if you're coming into Uganda, can you use 70% of the raw materials from Uganda? Can you put 70% of Ugandans on the wage bill? Can the 70% of Ugandans be employed within your sector? In that, Uganda is looking at, if you are on the wage bill, you'll be positioned to pay as you earn. If you are using the raw materials from Uganda, you're going to create a backward and forward linkage, and several Ugandans will be in position to benefit. So you find that if we can look at the cost-benefit analysis which we give out in terms of the taxes we forego, and we provide a wider range of benefits from the taxes we are foregoing, we'll be in position to benefit. But you find that there are some tax expenditure incurred by our government which you cannot trace in terms of cost-benefit analysis, because someone was awarded to do business in Uganda but is not supposed to pay any taxes, or to ensure that you use the raw materials, or you use we call it what, the local content provisions as per our local content act. So you find that we are losing out in terms of weighing the benefits versus the taxes we are foregoing. But the tax expenditure or tax incentives and exemptions, they are not totally bad in the economy. Like Uganda, where we are basing on more of importation of capital within the country.
All right.